Special guest on the show from Blackrock iShares, one of the largest providers of ETFs across the world. And joining us now from Blackrock is Heidi Richardson. Heidi, good evening, and thanks so much for joining us on the show and talking to ET Now. You recently put out a note saying India seemed to be getting back its luster. What is the central theme of your argument that India seemed to be regaining prominence as an investment destination in your view?
Our central case is based on a long-term view that the reforms the government is pushing forward will eventually put India on a strong, sustainable growth path. The fall in oil prices has been a tailwind for the Indian economy through its impact on inflation and fiscal accounts. It's a great opportunity for the country to make the necessary improvements. I think in the near term, we're starting to see the impact of these adjustments on the broad economy, including in consumption and corporate revenues.
Heidi, it's very interesting you make that point because, you've also sort of argued that what's going to work in India's favor is the reform trajectory that we're seeing our government in. How would you assess what's happened so far? We're talking to you at a time when, we're in the midst of what many call a path-breaking tax reform that's likely to be tabled real soon.
The reform program the government's put forward is very ambitious and broad-based, from addressing transparency and bureaucracy to taxes and foreign investments. So we'd expect it to be a long and onerous process. We've seen good advancements in certain areas, such as updating regulation to attract foreign investors. In other parts, it's true that the progress has been slower, which means certain investors are questioning the outlook. In my opinion, as long as we see things moving forward, even slowly, the story remains intact. Ultimately, signs of progress on key policy matters and of policymakers' commitment are essential not only for the growth of India, but also to support investor sentiment.
Heidi, within the emerging market space, how does India stack in terms of attractiveness as an investment destination and also on the valuations front?
I think that India compares favorably for investors. First, for the reforms processes we've discussed, which not many other emerging markets have in place. I think an important feature that India offers right now is economic stability, with high growth and low inflation, which is hard to find. For international investors, this is very valuable. From a valuation perspective, the stock market is in line with historical average, although admittedly more expensive than many other emerging markets. But for long-term investors, it's just about finding attractive entry points.
Okay, so, that's the long-term view. But the fact is that even off late, whether it's FIIs or FPI, the flows into our country, that's India, have been pretty healthy in the last few weeks. Do you suspect, not necessarily from a long-term point of view, but over the next, say, 6 months or so, we're continuing to see robust flows from Western funds come into India?
After investor sentiment rebounded from the UK referendum, the subsequent risk-on environment drove investors into emerging market exposures. We have seen an uptick in flows to our iShares India ETFs in recent weeks. We would expect the trend to continue, especially if the external environment remains supportive for emerging markets.
Heidi, how do you see the earnings trajectory for corporate India going into the next few quarters? Because the first quarter numbers so far, most strategists believe are just barely in line with estimates, but there are some green shoots visible in certain pockets. What are your thoughts?
Earnings growth has been disappointing in recent quarters, but we're starting to see a turn in the trend. Much of the drag has come from financials as banks go through the process of repairing their balance sheets. Going forward, we would expect corporates to continue to benefit from margin expansion, stronger domestic consumption, and targeted fiscal spending. Once the process of cleaning the bank's balance sheets is behind us, we could see a recovery in the credit cycle, which would be an additional support for the corporate sector.
All right, Heidi, we leave it at that. Thank you so much for taking time out for us. Heidi Richardson there talking to us from Blackrock iShares, and she's pretty confident that the brisk inflows into emerging market ETFs, and especially those that have a slant towards India, is only going to continue.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.